Okay, while waiting for me to get started, you may download notes for chapter 3. Okay. Mm. Okay, Assalamualaikum and very good afternoon everyone. So we get started with the doa first. Please, anyone volunteer to recite doa first before we get started? I guess everybody is at hometown, right? Semua dah kat kampung ke?
Dah, Miss.
Okay, volunteer to recite doa. Aiman, could you please?
بسم الله الرحمن الرحيم اللهم افتح علينا حكمتك واشر علينا من خزائن رحمتك يا أرحم الراحمين ربي اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي آمين.
Okay, thank you so much for the doa. Okay, when you download the notes, okay, this is the only note that I have. So we are now moving to chapter 3 or topic 3. And basically, topic 3, we have complex group structure. Have you downloaded the notes? Everyone, have you downloaded the notes?
يا ميس.
Okay, all right, good. Okay, so this topic 3, we are going to explore another accounting treatments, okay, on the complex group structure. Okay, whereby in this topic, we are going to learn on how we want to prepare a consolidated balance sheet and consolidated financial P&L, okay, CFS for different group structure. So in your previous semester, I believe, okay, you have learned how to prepare consolidated financial statement for a single group or single subsidiary, okay, like we did in previous chapter. Okay, this is holding have a subsidiaries. Okay, so basically, in terms of group structure, there are three types, okay, of group structure. So in the previous chapter, we deal with the preparation of CFS, okay, of the investor and its investees, holding and subsidiaries, and also we cover on associate, okay, associate. So this chapter, we are going to discuss on complex group structure, where we have three types of group structure. Okay, number one is a group structure with fellow subsidiaries. Okay, a group structure with fellow subsidiaries, or we call it horizontal subsidiaries. Okay, like this. Okay. Horizontal subsidiaries, which is you have holding company, and company may have different or many subsidiaries. Okay, many subsidiaries. Before this, we deal only with one subsidiary, and now we are going to the financial if all have a subsidiary invest in one company, which is a subsidiary one, as for example 8%, whereby holding company acquire 80% of subsidiaries. So remember the rules. If holding company acquire 50% of other company become a subsidiary. So if each acquire as 80% interest, they call it interest or investment in S, so S become subsidiary of H. Quite similar if holding have another interest in X, for example, with 90% interest or acquire 90% of investment, so X also become subsidiary of H. Case why this holding company acquires 60% interest in Y, so Y also become a subsidiary of holding company. So this is, we call it simple group structure. Okay, and basically we have covered in the previous chapter. Okay, so in this horizontal structure, okay, holding company will or has responsibility to prepare a consolidated financial statement for the group. Okay, but normally we cover only one subsidiary, but now we have more subsidiaries. So in real life, okay, holding company will have many subsidiaries, right? But the method of consolidated is the same, whereby you are going to consolidate 100% of H, 100% of S, all these subsidiaries, and you must less NCR, okay, non-controlling interest. That was, we call it full consolidation. Okay, we call it full consolidation method. Okay. So as I mentioned just now, the cost or fair value of equity shares held by the owner should be compared with the fair value of the asset and liabilities of the individual entities acquired to determine goodwill on consolidations. So in order to determine goodwill on consolidations, cost of investment plus NCI are going to compare with the net asset of all the subsidiaries. Okay. Um, Remember that we have covered on the equity method for the previous chapter. Okay, equity method is for associate company or joint venture. Okay. So then we move to another type of group structure, which is vertical group. We call it father son grandson structure. Or then we have another one is mixed group. So for the group structure that we have vertical groups, or we call it vertical group structure, something like where you have a holding company might acquire subsidiaries, for example, 80% controls of S, And later, S here might acquire other subsidiary X. Okay, other subsidiary X. So in this situation, S is considered a subsidiary of H, and X also subsidiary of S, whereby here S is considered as holding company of X, um, and in indirectly, X also become a subsidiary of H. Okay, and here in this case, X acquire Y, another company, and Y is considered as a subsidiary of X. Okay, more than if you notice the diagram 2 here. Okay, diagram 2 here. All the holding company as here acquire X more than 50%, which is 75%, is become a subsidiary of S, and Y become subsidiary of X, and X become a holding company of Y. Okay. By virtue of this definition of subsidiary, okay, um, we have basically two reason. Okay, two reason. Uh, when H acquire investment in S, uh, and S acquire uh, investment in X. So it's going to be here when you calculate interest of H in X as stated here in the notes again. How much interest in X? Okay, so interest of H in X would be um, 80% of 75%. So it's become 60%. Still, um, investment indirectly, investment in X considered as a subsidiary. So and if you look at the Y, is it Y is considered as subsidiary of H holding company, right? So interest of H in Y will be calculated by 80% of 75% of 60% of investment. Okay, so therefore, you the uh, Y investment of H in Y is 36%. Okay, is it Y considered as the associate company of H? All right, the answer is no. Okay, the answer is no. Well, Y here is still considered as subsidiary of H. Okay, so in this case, reason number one, H company acquire investment in SS. Uh, okay, and then with 80% of 75% of control. So 75% of ordinary share of X belongs to, sorry, 60% ordinary share of X is belongs to holding. Okay, right. So yeah, it's very sometimes very difficult to understand directly, but we have to look at here the holding company has an indirect shareholding of X and X and Y here. So that means that here holding company has an indirect holding ownership of X. How much? 60%, and whereby uh, holding company also has an indirect holding of Y with with a 60%. Okay. All right. So here, when we look at this explanation here, by virtue of definition of subsidiary, Y will be subsidiary of X, which is itself qualify as a subsidiary of S. Okay, X and Y form a group, and X has to prepare the consolidated X has to prepare the consolidated financial statement, uh, which is consists of financial statement of Y and X. Okay, S is a subsidiary of H. Okay, you can see the direct ownership here. S is subsidiary of H. Therefore, X, S, and Y are considered as a subsidiary of H here. So S is considered a parent and has to prepare the consolidated financial statement uh, consists of S, X, and Y. Okay. Uh, so S here needs to prepare consolidated financial statement, which is consists of X and Y. But here, the ultimate holding or ultimate parent here is the H, or we call it ultimate parent. H considered as a ultimate parent, and Y is S and X are considered as the intermediate parents. Okay, so H as considered as uh, ultimate parent and responsible to prepare a consolidated financial statement. Okay, according to Company Act 1965, MFRS 3, 10, and 127, each ultimate parent is what we call it need to prepare the consolidated financial statement. Okay, which is consists of financial position of all the four company. Okay, even though H does not has a direct interest in any subsidiaries except S. Okay, but still need to prepare the consolidated financial statement. So if you can see here, the H has indirect interest in Y of only 30%. So how to calculate the ownership of interest? 80% of 75% of 60% ownership. So 36% is still considered a subsidiary of H. Okay, it's not associate company, and H still need to do full consolidations of the whole company. Okay, so the voting power of H company over uh, Y company is 36%. All right. Okay. So do you follow so far? Are you still with me?
Yes, Miss.
So the reason the situation in this what we call it vertical group father and son grandson structure, the reason number one H company acquire investment in S2 would be 90% of 80% is 75%, or here according to the example is sorry 80% control of 75% control, which is 60% control, okay, of X, and 36% control of of Y. Okay, all right. So this is the definitions and consolidation techniques. Okay, how we are going to combine all those vertical group structure. Okay, especially when we have this vertical groups. Okay, there are two ways to consolidate a vertical group structure, which is multiple stage method and single stage method. So we are going to look at the multiple stage method first, which is consolidated of financial statement of subgroup prepare first. Okay, let's say here we have holding subsidiary and as another subsidiaries. Okay, in the multi-stage method, the financial statement of subgroups are going to prepare first with the subgroup here. Okay, the lowest rung. The consolidated financial statement for the subgroups in the next rung are prepared, and incorporating, which is consists of consolidated financial statement of a subgroup. Okay, in the in other words, okay, if we read this what we call it the terms here, basically it's going to uh, record this one first. Okay, record consolidated as an S and SS. Later, is going to join group structure H. Holding company. Okay. So the other method is indirect method, whereby you are going to combine H plus S plus SS subsidiaries. Okay, so that one is for the vertical group. For the mixed group, okay, the last part here, let's go back to the last part, which is mixed group. Okay, mixed group where you have a holding company acquire subsidiary, but I think it's going to be in the other. Do we have? Let me check here, because the mixed group structure. Okay, here. Okay, but later on we are going to discuss on vertical group structure, on how we are going to prepare financial statement of these two on this vertical structure group. Okay, before we proceed to mixed structure. Okay, basically or theoretically, for the mixed structure 15.3 class, you may go through for 15.3. Okay, this is mixed group structure. Okay, where you have holding, let's say acquire 80% of subsidiary. Okay, and at the same time, holding have, okay, holding acquire 80% of subsidiary, whereby subsidiary acquire other company X with 40%. Okay, which is direct interest. But at the same time, H have indirect interest, sorry, direct interest in X. So H acquire S, S become subsidiary of H, 80%, and S acquire X 40%, which is we call it direct interest, okay, 40%, and at the same time H acquire X 30%. Okay, so in this case, holding company has direct interest in S 80%. At the same time, holding company has direct interest in X of 30%. Okay, right. So this is mixed group structure. Okay, we are going to look at the how um, the treatments for these mixed groups. Okay, later on. Okay, let's get back to the vertical structure. All right. Look at example number one, class. Okay, this is very basic example on how you are going to record a consolidated uh, financial statement or financial positions for a very basic vertical group structure. Okay, so we are going to use a single stage, multi-stage method first. Okay, and before you go with the treatments, okay, let's look at the issue, some of the issue here. Okay, issue, especially when acquisition of a subsidiary at the uh, different dates. Okay, right. That means here, the issue here is the subsidiary were acquired at later date by the direct subsidiary of ultimate parent. So that means subsidiary acquire at the different date. So in this case, you have to identify pre-acquisition reserve. Um, um, if pre-acquisition reserve, which is on the date of acquisitions, okay, or DOA on the date of acquisitions. Okay, let's look at together so that later on when we prepare the financial statement, you are not you are clear about this. Okay, the share in subsidiary were acquired at a later date by the direct subsidiary of ultimate parents. That means X S, if you have, let's say here, HS and SS, right? So H acquire S, uh, for example, in the this date, okay, and later on, subsidiary acquire another company, SS here with the another date. Okay, so there could be a situation where the investor apparent H has controlling interest in a invested subsidiary S before the subsidiary S acquire a controlling interest directly in a invested subsidiary. So here H acquire S 90%, and later in different state S acquire SS subsidiary in the different state. Okay, so initially the group will consist of holding company and its subsidiary. The group will expand, the treatments will expand to include subsidiary from the date becomes a subsidiary of the holding company. Okay, this is the theory parts. So you have to identify the reserve of subsidiary from the date its share were acquired by the subsidiary post acquisition reserve. Okay, that means you have to determine the pre-acquisition reserve, like pre-acquisition profits, or if you have pre-acquisitions general reserve and other reserve, asset revelation reserve, and so on and so forth. So you have to identify reserve existing on the date of acquisitions. Okay, here there are example. For example, H acquired 90% interest of S in January X1, okay, when the reserve of S 40,000. Okay, and S later acquired 80% control of X in 5 years later when the reserve of S 70,000. Okay, and that X was 25. Reserve of S 70,000. Okay, before this 40,000, and then X 25,000. So for the financial year end, the consolidated financial statement will be include the financial statement of H and S. Okay, mm, and that is the this is common, right? Because you have only H and S year end 2021, for example. 2025, the financial year end, the group financials will comprise or that of H, which is the ultimate parent, and S and X, intermediate parent, and the pre-acquisitions reserve need to consider is 40,000 and 25,000 of X. Okay, later on when we prepare the accounts, we will see how it's going to be included. Okay, the other issues you need to take into considerations. Share in the subsidiary were acquired by direct subsidiary of the ultimate parent on earlier date. Okay, at at the time of investor may acquire a controlling interest in a investee that already has its own subsidiary. That means the S is already acquire SS before H acquired S. Okay, in this case, the first issue, H acquire S, later on S require SS. But in this example, the holding company acquire S in 2027, for example, 2007, whereby S already acquire SS in 2004. So in this case, when the holding acquire the controlling interest in subsidiary, it is also acquire an indirect interest in sub-subsidiary. Okay, so in this case, the post acquisition reserve of sub-subsidiary SS will be that portion of the reserve earned by sub-subsidiary after the holding company acquired. Okay, so that means the post acquisition reserve of SS will be portions for the holding company, right? So let's look at the example here. H acquired 80% of voting interest in S on 1st January X7 when the reserve of S were 25,000. Of that, of X were 10,000. That means when H acquire voting shares or voting interest in subsidiary, okay, the subsidiary already have a subsidiary of X and their reserve is 25 and 10. So S has a 75% interest in X from January 2024. So when the reserve of S were 5,000 and that of X is 2,000. So the parents will prepare a consolidated financial statement with the pre-acquisition reserve 25,000 for S and 10,000 of X. okay, which is on the date of acquisitions. All right. Okay. So let's look at this multi-stage method where we have vertical group structure. Okay, we go to the questions. Okay, because before we go to jump straight away to the task questions. Okay, because I noticed your task questions is for the uh, complex group structure. Okay, you have a task which is covered for this topic. Okay, topic 3. All right. Okay, basically, you need to understand the basic preparations of financial statement of a vertical group structure. Okay, let's go through the questions here. Given below a statement of financial position of H, S, and X, right? We call it consolidated balance sheet here because you have ordinary share, return profit, and all the investment at cost. Okay, so here is a side statement of balance sheet. Okay, of H, S, and X. Okay, at 31st December 2008. All right. Here, if you go through, you have a retain. You may identify return profit or pre-acquisitions profit. Return profit only the reserve here. Okay, return profit here is only the reserve that they have. Very simple structure. So first of all, you need to identify pre-acquisitions reserve of X and X. So later on, when we go through the additional informations, you will have the pre-acquisition reserve here, it's mentioned here. And if you notice, in this case, in this question, has H acquired S by 180,000 interest of shares, okay, right? And S acquired X 100,000. 100,000. Okay, so you can see here H acquire 150,000 of the 200,000 issue of ordinary share of S on 1st January 2003 when the return profit of S was 20,000. Okay, so you already recognize here the pre-acquisition reserve. Okay, and later on January 20th, 2004, S acquired 80,000 of the 100,000 issue of ordinary share of X, and the balance in the return profit of X uh, on that acquisition date is 10,000. Okay, in this case, you have has has a subsidiary. Okay, ada indirect interest dalam X lah, if you can see here. Okay, and S here totally subsidiary of H. So H ada indirect interest dalam X. If you notice here, you can see from the diagram here. True has interest in S by the virtue of S. So let's look at the we go through already additional informations here. Okay, whereby H shareholding in X is 150 divided by 200, which 75% ownership, and CI here is 25%. Okay. Pre-acquisition profit 20,000. You already identify, right? considered as holding company of X. Okay, and with 80% ownership, whereby you are going to divide 80,000 divided by 100 here. Okay, 80,000 divided by 100, so you have 80,000, 80% ownership. So pre-acquisitions profit for as pre-acquisition profit existing on the date of acquisition for X is 10,000. All right. So as I mentioned here, you need to identify the pre-acquisition profit first before you uh, proceed with the consolidated financial positions. Okay. And NCI mentions in B, a non-controlling interest is measured in proportions to its interest in the fair value of a net asset in the subsidiary, okay, which is a partial, is considered as a partial goodwill. So NCI needs to calculate using partial goodwill. Okay. Um, okay. So in order to get an NCI, remember you have to get a net asset of subsidiary on the date of acquisitions. Okay, right? To get the NCI, and you time the NCI portion. Just now we have 25% NCI portion for H, and sorry, NCI portions for the first part, which is H shareholding in X, sorry, in S, and 20% in S. Okay, all right. So let's look at here. In order to prepare financial positions for the group, you need to prepare schedule. Okay, you have no choice. You have to prepare the schedule in order to get the goodwill, to get an NCI, and to get the retained profits. Okay, so consolidations transfer CT, or cost of investment. In other words, cost of investment, right? Total cost of investment in S. Okay, you must calculate uh, cost of investment plus NCI, so you will get the total cost of investment. Okay, so for group X and X, S and X first, okay, before you combine with H. So in this case, you have 100. Okay, 100 here. Consideration cost of investment, right? When the holding company buy subsidiary. Okay, 100. Okay, and then you are going to match with the net asset of X on the date of acquisitions. Okay, net asset of X consists of ordinary share of X, 100,000. Okay, here, ordinary share of capital of X. And you have to uh, add pre-acquisition profit of X. Okay, so pre-acquisition profit of X, you have 10,000. Okay, you have 10,000. Okay, you are going to prepare a group of X and X first before you combine with H. Okay, all right. H, holding company of S. Holding company is referred to as company, and whereby the holding company acquire X as a subsidiaries. Okay, so 80% here. So total net asset here is 110. So you may get a portion of subsidiary, sorry, a portion of NCI 22. So directly you transfer to here NCI 22. Okay, and in order to get the goodwill, you have to compare, okay, total cost of investment with the net asset. That means 122,000 minus 110. Okay, you have 12 goodwill. Okay, goodwill here is 12. And yes, 12 goodwill. Okay, and return profit of S here, since S is a holding company, you are going to transfer directly to group. Okay, group return profit 80,000. 80,000 group return profits here, 80,000. And then you need to calculate in order to get the group return profit for S and X. You have to calculate post acquisitions reserve. Okay, whereby it's going to share between non-controlling interest and group profits. So so in order to calculate post acquisition profit, you have to include return profit of X, which is 60,000. Okay, this is actually return profit of X on 31st December. Here, 31st December, right? December 2008, it's considered the 60,000, and it's considered as a post-acquisition profits already. Okay, so you need to minus pre-acquisition profit of X. Pre-acquisition profit of X, which is 10,000 here. 10,000 here. Okay, I think you did already in previous lesson. So the post-acquisition profit, okay, is 50,000. Okay, this 50,000 you need to divide it by NCI percent portions and also group portions. Okay, so NCI you have 20%, so you have 10,000 for NCI portion and 40,000 for the group, and in total you have 12,000 for goodwill, 32, 22 plus 10, 32,000, and for the group you have 80 plus 40,000, you have 120,000 return profits. Okay, this is a schedule you have to prepare before you consolidate financial statement for subgroup S and X. All right. Okay. So when you prepare this consideration transferred, okay, you have 100,000, and non-controlling interest is 22. Okay, which is captured from here, and ordinary share for the SNX 100,000. You totally get from the questions here 100,000. Okay. and then you include return profits 110. Okay, so this is how group return profit divided. Okay, as we did with the schedule just now. Okay, whereby a fair value percentage of net asset 22,000 and retained earnings of X60 divides the pre-acquisition 10,000, post-acquisition 50,000, and divided by ownership 80% and 20% CI. So retained profit of S80,000. So this is group return profit and non-controlling interest. Okay. All right. So consolidated statement of financial position S and its subsidiary X at 31st December 2000 X. Okay, we are talk about because multi-stage, you have to complete as with subsidiary and their subsidiary first before you go with the stage 2, where you prepare consolidated financial statement of HN subsidiary group SNX. So in order to prepare financial statement, financial positions, they just combine as an similar what we did before this, X plus X for the asset and goodwill on consolidation 20,000, 12,000. Ordinary share, you just transfer the ordinary share of S only, which is 200,000. And then you have consolidated retained profit, which is consists of 120,000. Okay, group retained profit here. Group retained profit that we have calculated using schedule 120, and then we have no controlling interest 32,000. Okay, what is it? All right. Any questions, class? Do you follow so far? Slowly try to understand on how we are going to consolidate this mixed group. This vertical group transactions. Okay, are you still with me? Ada ke? Kelas?
Ada, madam.
Okay.
Ada, Miss.
So kita break dulu about 10 minutes before we come back and discuss more about this mixed vertical group structure before we proceed with the exercise. Okay, 10 minutes. Break. Okay, let's continue. Tadi Miss ada discussion sekejap, so masuk lambat sikit. Discussion untuk final exam actually. So Miss ada discussion dengan team. Okay, so let's we continue lah. Alright. Okay, so when we where is it? Okay, so for the stage 2, prepare consolidated financial statement of H and sub groups S and X. Okay. Okay. Alright, so last time we talk about foreign exchange company kan, so we have covered first method. So method yang kedua tu, Miss waiting for questions okay from group leader, but I didn't get that sample of another method. So bila Miss dapat balik sampel tersebut, I mean for the questions because set A set B our final exam tu dua-dua guna first method, right, for foreign exchange, which is foreign exchange translate to RM Malaysia translated to the financial currency, functional currency translated in RM. So I'm waiting actually, I forgot to remind you if we have a sample questions with regard to functional currency translated to another currency. I mean to Brunei, to Singapore, Indonesia currencies, then I'll get back to that. I think I should get back to that one. Okay. So far I didn't get the sample. Past questions more on functional currency translated to RM. Okay. Alright, so let's we continue because we don't want to waste our times waiting for materials. That's why I proceed with this complex group structure straight away. Okay. Now, when we prepare a consolidated financial statement of H and group S and X, okay, consideration transferred. That means cost of investment for S 180. Now, stage 2 combinations or consolidated financial statement for all groups. Okay, and non-controlling interest 25. Okay, before okay, basically before we proceed to, let me check to this. Okay, you are required to prepare schedules again, schedule of H and subgroup X and X. Okay, so at the first stage you prepare schedule for S and X only. Okay, in order to get the figures here, for example, the control interest for which is combinations of holding and all the subsidiaries. Okay, we have to prepare this. Okay, so first of all, as usual, when you prepare the schedule again for the you must prepare the percentage of acquisition. Okay, holding is 75% and NCI of 25%, which is consists of H sorry H plus a subgroup X and X, S and X. Okay, so consideration transfer, cost of acquisition of S by S, sorry, cost of acquisition of S by holding company is 180,000. Okay, if you look at the questions once again. Okay. 180 here. Okay, investment, a cost of acquisition of S by holding company 180. Okay, so let's get back to the schedule. This is a schedule for S. Okay, this one. Right. Okay. So 180, and then you have to compare with net asset of S. Net asset of S consists of pre-acquisition ordinary share group of S and S. Okay, which is 200,000. Okay, 200,000, and you include also pre-acquisition profit of S. So when you go back to the questions, okay, yang ni pre-acquisitions, okay, you have 200,000 ordinary share capital, right, of S. That one is non-current asset, sorry, net asset of S consists of ordinary share capital, and also you have pre-acquisition profit of S, which is 20,000. So that's why again you have to prepare the schedule like this. Here, okay, and then you have 220 net asset of S, and then you calculate the NCI. Okay, 25 percent NCI portions times 220,000. So the goodwill here, the NCI here is 55,000. Straight away transfer to NCI portions. All right. So cost of investment in S actually 180,000 plus 55,000 is 235,000 included NCI. Okay, that's why you remove NCI here once again. So when you compare, in order to calculate goodwill, you compare cost of investment with the net asset of S. You have a 15,000 goodwill. Okay. So then you have to calculate the post acquisition return profit of S. Okay, so when you combine group return profit, now holding company prepare the financial statement, right? So before this, we calculate holding company prepare uh, holding company of S, prepare the statement consists of S and X. Okay, class, give me a minute, give me 3 minutes kejap class. Miss nak kena keluar. Is there any questions yang nak tanya?
Miss tadi Miss tak share screen.
Oh, ya Allah, tadi Mr. share screen Ya Allah, kenapa boleh cakap? Penat puas Mr. tunjuk dekat sini. Okay, sekejap ya. Miss kena turun sekejap. Okay, let's get back to this. Okay, as I mentioned earlier, tadi Miss nak tunjuk screen kan. So, in order to prepare here, in order to prepare financial positions, okay, stage 2 ni, in order to prepare statement of financial positions, you are required to prepare schedule first. Okay, sebenarnya yang dalam ni adalah schedule, but as a working we always combine straight away goodwill, calculate one by one, column by column, goodwill, SI and group profit. But if you are comfortable to use this kind of quite method, it's up to you. Okay, I have to go through acquisition of S by H, 180,000. Tadi Mr. show screen kan, so you ambil dekat sini, sebenarnya you ambil dekat soalan ni. Okay, which is okay, 100,000, right? And then cost of acquisition of cost of investment consists of investment in S and NCI. Then you compare with the net asset. Okay, net asset consists of ordinary share of S, okay, 200,000, and pre-acquisition of S. So that's why pre-acquisition is 20,000. So that's why here, when you want to calculate goodwill for the group H plus subsidiary S and X, okay, you are going to record here group ordinary share to 200,000, which is of S, and pre-acquisition of S 20,000. So the total 22,000. You are going to calculate NCI portions here. You get the total cost of investment in S, and you 235. Okay, and then you get the NCI portion. And of course, return profit for holding, straight away you transfer to group. Okay, straight away transfer to group. Last week I mentioned why you'd have to transfer H only, 100,000. Okay, transfer straight away to group here, portion here. Sometimes online susahkan kita nak buat calculation, so I can just display. Alright, then return profit of S 120. You have to less the pre-acquisition of S, what 20, so you have 100,000 is the post-acquisition retain profit. Okay, and must be shared with NCI and also NCI portion and the group portion. So here there is an issue of goodwill, because goodwill on the you have a goodwill 15,000, okay, which is includes NCI, goodwill of NCI. Okay, so according to the workings here, H and S goodwill and goodwill is 15,000. Okay, and then antara H plus S ada NCI, okay, which is 75 as 25%. And then you also have to consider dalam 50,000 ni ada dalam, okay, ada NCI between S and X ni, which is 25%. Okay, 25%. So you are going to eliminate. Alright, so you have to eliminate. Okay, basically, when you goodwill portion, goodwill on consolidated of S and X belongs to an NCI of S, which is 25%. Okay, out of 15% goodwill here, Okay, um, it belongs to consolidation of S and X. So ada dua group of NCI, right? So you have 15,000 here. Okay, cuba kira berapa dapat 15,000 out of goodwill. Let me check. Goodwill ni 2 times okay. So here, nampak tak pengiraan dia? Okay, fair value of net asset 120,000. You last pre-acquisition you have 100,000, and share between group retained profit 70%, 75%, and interest 25%, which is non-controlling interest. So non-goodwill of X, 15,000 ni consists of goodwill of X, okay, which is you have to eliminate from the non-controlling interest. So here 12,000 times 25%, you get 30,000. So, okay, cuba kira balik NCI untuk ni. H 75%, NCI 25%. 25% times okay, out of 15,000 goodwill ni ada which is on, ada goodwill daripada consolidations. Okay, cuba tengok kita punya goodwill ni. Kita dah kira kan? Ni 12. Okay, masa kita kira group NCI ni untuk group X and X, okay, we have 12, right? 12. And then bila kita kira lagi goodwill on consolidation of H plus all the subsidiaries, we have 15. So we have different 3,000 you have to eliminate. Okay, let's get back to here. So goodwill of X, okay, 12,000 kena because goodwill of goodwill ni dikongsi oleh NCI 25%. So kita kena daripada 12,000 tu dikongsi oleh NCI, which is the portion of 25,000. So you kena remove the portions from the group consolidations. So in this case, goodwill of X 12,000 times 25% consolidations, you have 3,000. So okay, and then the total NCI here, last you have to minus 3,000. Okay, 3,000. Right, so minus because you have to eliminate, which is you debit NCI 3,000 and credit goodwill 3,000, which is you have to eliminate from why you have to eliminate, because 12,000 is already included in this 15,000. Hopefully you may understand that. Include it with the 50,000. So basically you have to remove from NCI and goodwill. So you are going to debit goodwill, credit NCI. Sorry, debit NCI, credit goodwill. So this is a total group NCI, group return profit, and goodwill. Okay, so when you prepare statement of financial position of H and its subsidiaries, okay, it consists of S and X, okay, sundry asset, because this is only a example, so you just you just add, okay. So for the goodwill on consolidations, 12,000, which is consolidations of S plus X plus 15,000 group consolidation H plus all the subsidiaries, you less my NCI. So the goodwill on consolidation is 24,000, ordinary share of S only 500,000, and consolidated return profit you are going to add, okay. 77 plus berapa tu? 120 okay, 175 you already got from here, 175. Okay, so then no controlling interest, okay, for the group S plus X, and for the entire ultimate groups H plus X and X, okay, 77, okay, which is from here, NCI from here, 77. Okay, so basically these are the final figure of financial positions between ultimate company with all the subsidiaries. Okay. So tomorrow tomorrow is public holiday, so the class supposed to be postponed lah, right, and reschedule. Okay, untuk hari Khamis. Okay, untuk hari Khamis kelas you sepatutnya kita cuti sehari je kan. But I believe that you are we have a family gathering. So kelas kita pukul 4 hingga 6, betul tak kelas? You are going to proceed or you want to reschedule for Thursday? I asking you questions. Are you still with me? Untuk hari Khamis, you want to reschedule or you want to proceed with the lecture? I mean, we are going to calculate. Start with the exercise using test questions on Thursday. So untuk esok, okay, Miss Plan kita sepatutnya kena reschedule because public holiday kan. Tapi what I'm going to do is Miss akan buat video lecture, okay, video sessions, guide with the guidelines or guiding you on how to attempt the questions, test questions using this vertical group structure, consolidated financial statement. So any question, class, for this? This is very simple, right? So in order to answer the questions, Miss ada ni the test ni, tapi kita tak ada lah buat hari ni. Miss just introduce saja. Okay, this is the test questions. Last semester they proceed with the open book test. Tapi Miss tak sure untuk you all ni, Miss nak buat open book ke nak buat face to face juga. Okay, this passage question on the test, talking about tested you guys on MITS complex group structure. Okay, ini dan kita akan buatlah consolidated with additional information banyak lagi. Alright, yang tadi Miss tunjuk sikit saja, ada satu je. That's why tapi we have to go through the basic procedure, basic on how we are going to prepare consolidated statement of financial position of complex group structure, especially vertical group structure. Okay, di mana kita guna single multi-stage method. Okay, so macam tadilah multi-stage method, kita ada satu lagi single stage method. So according to these questions, okay, kita go through dulu. Kemungkinan untuk soalan ni Miss akan guide you on how to prepare the complex group structure on vertical group using method, mixed method or multi-stage method or single method. Okay, so as usual you ada 3 bentuk requirements to fulfill for the test. First, you have to calculate goodwill, NCI and group retained profit, sama lah. Tapi kenapa banyak kelas markah di sini? Sebab kita kena prepare 2 ataupun kita kena prepare panjang lah, which is subsidiary and sub-subsidiary and holding plus subsidiary and sub-subsidiaries. Okay, so basically to prepare the consolidated statement of financial positions, it's require you to do a lot of workings. Okay, and here we have what we call it, apa dia sebut kat sini? Okay, ni dia dah masuk increase of in ownership, so kita belum cover lagi. Hopefully later on. Alright, class, I think do you have any questions so far when we go through this? Any questions?
Tak ada, Miss.
Okay, so apa yang you obviously you detect dekat sini is on the goodwill, kan? Goodwill biasanya kita tak usik. Goodwill biasanya kalau katakanlah goodwill dekat sini kita dapat 12. Goodwill dekat parent, goodwill dekat sini, adjustment dekat sini kita dapat 15. Okay, basically you boleh je combine kan, 15 tambah 12 and then you prepare the consolidated financial statement. Tapi tak boleh sebab 12 ni ada portions NCI sebab this belongs to X and X. Okay, right. So antara HNS ni ada NCI, antara S dengan X pun ada NCI. Bila you nak prepare group of financial positions, you kena eliminate X ni. Okay, because it's already included in the S as a group of company. So memang okay, kita akan go through. Mungkin esok Miss buat video lecture on single stage method, but I try to get back to my course leader which method they are using so far. Otherwise we focus on the popular method that have been used by the company when they prepare complex group structure. Okay, class, by this I will end my session today. Okay, you need to scan this attendance first. Okay, ada question tak? Hari Khamis kita buat kelas ke kita buat video lesson? Which one you prefer? If you want to proceed, then we still proceed on Thursday lah with the lecture. Okay, I need the confirmations. So today is 26. Alright. Okay, thank you so much everyone. I'll see you again on Thursday. Bye for now. Assalamualaikum. Okay, thank you so much. Selamat Hari Raya Ailadha. Take care and happy holiday.
Thank you, Miss.
Assalamualaikum.
Yes.
Yeah.